You are listening to C-Suite Perspectives, a podcast by the Conference Board.
Welcome to C-Suite Perspectives, a signature series by the Conference Board. I'm Dana Peterson, Chief Economist of the Conference Board, and the guest host of today's podcast episode. In today's conversation, we'll discuss CEO confidence in the fourth quarter of this year. Joining me is Allen Li, Associate Economist at the Conference Board. Welcome, Allen.
Hi, Dana. Happy to be here.
Excellent. So let's just jump right in. So the Conference Board just released the Q4 CEO confidence survey for the U.S. So tell us about this survey.
Sure. Happy to do so. The CEO confidence survey, we do this in partnership with the Business Council, which is whose member constituents are Fortune 500 companies. And in the latest survey, which is for Q4 2025, we fielded this from September 22nd through October 6th, and there were 130 CEO responses. The main headline is that it ticked down. The number currently is 48 from 49 in Q3.
And so what does 49 mean?
Yes, of course. So a reading below 50 signifies that more people are saying things are negative than people are saying that things are positive. So we're a tick below, 48, which is just saying that saying that CEOs are just a bit cautious, and we'll get into it in what they think now and ahead, but they're just a bit tentative.
Well, that's really good to know. And just given the government shutdown, why is this information special? Why is it
Well,
important?
yeah, well, people are looking for indications for the economy, right? How is the labor market doing? That's one of the most widely watched data that come out from the government. Investment plans. Is there a recession coming? And so the good part is that our CEO survey covers all of that and more.
Excellent. What did the measure of CEO confidence say in the fourth quarter about how executives at large firms view the U.S. economy?
Yeah, and you made a good point, Dana. Executive at large firms. These are executives from Fortune 500 level companies. So you could imagine that this survey is measuring a large chunk of like the total market capitalization of corporations doing business in the U.S. And so I want to take it back to Q1, where we started off the year quite good. The reading was 60. And in Q2, with the announcement of tariffs, there was a lot more uncertainty. So a little bit more CEOs thought that recession might happen in that time. So the measure dropped from 60 to 34. Now that has largely subsided. Starting in Q3, it bounced back to 49, and now we're at 48. So things are not looking like they're falling apart. CEOs are just a bit, tentative. They're a bit more in a wait and see mode. But if we look further later on into the survey findings, we actually see some positives that are in this survey.
Great. So let's talk about the concerns first. What are the top concerns among CEOs?
Well, when we asked about is some of the industry risks, right? They're worried about geopolitical concerns. They're worried about, cyber and AI. The tariffs certainly is comes next, but it's fallen in terms of high risk in the ranking. They're actually, in fact, not very concerned about a recession, but I guess we'll get into that later.
Yeah, so can you just list the top five again?
We've got geopolitical, we've got cyber, AI and new technology, legal and regulatory risks, and tariffs.
Yeah, so even though tariffs are still pending, I think CEOs are getting a little bit more clarity, but certainly regulation, geopolitics, all those things are still live and definitely at the top of their concern. So that's very interesting. So What are CEOs saying about the state of the economy now compared to 6 months ago?
So they're saying that the state of the economy now is just only slightly worse compared to 6 months ago. So you got very ever so slightly more people, 37% saying things are a little bit worse compared to 34% last quarter. A little bit less are saying things are much better or positive, 20% compared to 22%. So a little bit less people saying things are better, a little bit more saying they're worse, but overall, not much change.
You mentioned that few are anticipating a recession going forward, but what did most of them say about the economy?
Yeah, so this is a was a very interesting question this quarter. 64% only expect mild economic slowdown, which the majority expect only a mild economic slowdown with only slight inflation risks, not a recession. Only 4% expected a recession. And I think that is in line with our TCB projections, right, Dana?
Yes, absolutely. So that's great. CEOs are listening to us, or at least we're aligning together. So, what are CEOs saying about their own industries currently relative to 6 months ago?
Yeah, likewise to overall economy, it's still in the negative territory. So own industry compared currently is at 47. It actually improved from 44 last quarter, but it's still under 50, and they're still just cautiously optimistic, I would say.
Okay, let's look forward. So, over the next 6 months, do CEOs believe that the economy is going to be better versus today?
Yeah, so here is where I see the main driver of that downtick of 1 point because CEOs felt that expectations for the economy was a little bit is going to be a little bit worse. I mean, the reading is 46, right? So and that came down from 50, which was perfectly balanced last quarter. Yeah, within that, yeah, still a little bit less said things are should be better. A little bit more said there was going to be worse. I think that's due to, that tariff uncertainty is still a factor, right? I think that's what pulled us down in Q2, but and it's still there, so possibly that's one of the factors there.
Thanks, Alan. Were they more optimistic about expectations for their own industry?
Yes, certainly. Like you said, I feel like well, they also feel like that they have more control over the situation. Ever since tariffs were announced, they put measures into place to mitigate the downside risks, and we'll see that. They're worried about cost pressures, but they have some solutions there. Going back to the reading, that's actually the one reading that is positive. It's at 51, which is, well, slightly tipping over to the positive side there for their expectations for the own industry 6 months ahead.
Excellent. So that means there's just a little bit of hope. Okay, we're going to take a short break and we'll be right back with more of my conversation with Allen Li.
What does the future of work mean for your employees? How will your company navigate the future of AI? Will there be a global recession? At the Conference Board, our experts translate the latest research and economic analysis into insights and real-time problem solving for your organization. Membership at the Conference Board provides your team with an assortment of knowledge from economics, marketing and communications, governance and sustainability, public policy, and human capital. As a member, you'll have access to our center experts, member-exclusive events, data and benchmarking tools, and peer sharing that will help you understand the present and shape the future. Consider becoming a Conference Board member today by visiting www.conference-board.org.
I'm your host, Dana Peterson, Chief Economist of the Conference Board. Again, I am joined by Allen Li, Associate Economist at the Conference Board. So, Alan, let's pick up on what we were talking about, CEO confidence in the fourth quarter. There's several labor market measures in there, and certainly we missed the employment report and we missed JOLTS given the shutdown. So I think it's really fantastic timing that we're getting these, signals from CEOs about the labor market. And indeed, when I looked at the the data, we're actually getting mixed signals. There's not much hiring, but there are also few layoffs in the data, at least up until now. What does the CEO survey say about this, or does it reflect any of this?
Certainly, Dana. Looking at the surface, there doesn't seem to be much change, like you said. There's not much hiring, there's not much layoffs. However, when I look deeper into it, actually, there is some positives there because in the fourth quarter, a little bit less said that they were going to do a net reduction in the workforce, 29% compared to 34% in Q3. And interestingly, in Q3, the previous quarter, we had more CEOs saying that they were going to do a net reduction and expansion. But in Q4, it has recovered so that now more is saying that expansion rather than reduction. So, that's actually a sign that the labor market should hold up in the near term.
But isn't there a third line about what they're planning to do with their workforces?
You certainly 39% still say little change. So they're keeping their workforce plans steady.
Exactly. So definitely mixed signals, or at least different industries are behaving differently. Certainly, industries that may be very more directly affected by changes in tariffs or higher tariffs, maybe they're thinking about letting some people go, while other sectors that are still experiencing labor shortages are not. They may need to hire people, but you still have this big, slightly more than a third who are just doing nothing. They're just waiting and seeing, just given all the uncertainties that you've spoken of. Um, Despite some
Mhm.
weakness in industries directly affected by tariffs, labor shortages definitely are a problem for some companies. What did CEOs say about finding qualified workers?
Yeah, they've been reporting a little less problems every quarter since for the past few quarters already. So currently they're actually not having that much difficulty finding qualified workers.
So, just thinking about that, what are CEOs saying about wage growth? And wage growth is important for consumers so that they can manage higher prices due to tariffs, but also labor shortages and tighter immigration policies that feed through business costs to consumer inflation gauges.
Yes, certainly that's a very important one. Right now, it looks like they are keeping their wages quite steady. Most of the increases are still in the 1 to 3, the 2 to 4% range. They have came down a little bit, but that is in line, I think, with the way we see inflation coming down a little bit as well. So I think they're still keeping pace with inflation, which is also a good sign.
Yes, and definitely these rates are, you know, certainly still above inflation, which is good for workers. Are CEOs mainly planning to keep wage rates above pre-pandemic levels over the next 6 to 12 months?
Yes, I think that's what I'm seeing. Yes.
Again, that's really good for consumers as they face higher inflation. But certainly, we have seen companies bringing down wage levels after the emergency of the pandemic, and basically refilling the coffers of the labor market. But over the next 6 to 12 months, it seems like many of them are just they're not going to lower their rates that much, and certainly not to the range that we saw between the great financial crisis and the pandemic, which was pretty low. Okay, just a few more questions. Are CEOs of large firms experiencing increasing pricing pressures?
Yes, that is a concern.
And where? Where are they seeing these pressures?
We asked a special question in third quarter where they identified, well, mainly supplier costs is the number one, identified by 71% of the respondents. Materials comes next. Materials and technology, both at about like 6 out of 10 CEOs saying that there's increasing costs there. So those are the three: supplier costs, materials, and technology.
Interesting. So, considering the economic, political, and geopolitical backdrop, are CEOs altering their investment decisions?
They have not actually. Most still report no revision. 57% still say that. So they're keeping their capital spending plans steady, if not slightly tick up, upward, right? So they haven't cut back yet.
Well, that's great news. So, even though, as you say, CEOs are slightly negative on the outlook as well as their own industries, they're not making big changes right now. They are considering some things, but for the most part, it seems like they're still on hold, waiting for clarity on a number of fronts. But certainly those issues for them, including increasing prices and also concerns about geopolitics, they're still there. And we need to continue to ask CEOs what they're thinking, because certainly we anticipate that there will be greater clarity on regulation, some aspects of fiscal policy, including spending on greening and infrastructure and R&D, as well as new regulations that will provide greater clarity in 2026, and we could actually see a boom in business investment and maybe a little bit more hiring once they understand what the new landscape is. But for now, this is what CEOs are thinking. Thanks so much, Allen, for joining us today and discussing the C-Suite Confidence Survey.
Thank you, Dana. Happy to be here.
And thanks to all of you for listening to C-Suite Perspectives. I'm Dana Peterson, and this series has been brought to you by the Conference Board.
You have been listening to C-Suite Perspectives, a podcast by the Conference Board.